All right, traders, our target was hit right here. That is take profit. And what strategy did we use for this trade? It is the TGIF strategy. I will tell you everything about this strategy. This is one of the strategies ICT shared on his YouTube channel. And I have been able to use this strategy to take trades severally. I have so many ways of taking trades with the ICT concept. Now, before taking this trade, I actually shared it with the community members right here. I said, guys, the trade is ready. All right, so this is it, and you can actually see the screenshot. Now, before taking the trade, we actually did some Zoom session doing live analysis, and then we took the trade together, and I call it off right here. I said, guys, remain small, we can take our profit. Happy weekend, guys. So that was how the trade went in our direction. Now I'm going through every single process I went through before taking this particular trade, TGIF, and then I will show you how you can repeat it anytime and any moment. So what exactly is the TGIF? It is simply thank God is Friday strategy. It was a strategy that ICT created. I'm going to explain it to you in detail in this particular video. But then if you're new here, you've never watched my video, I want you to do something. Help me hit the like button, subscribe to this YouTube channel, because this is one of the best places you can find trading tutorials for free. All right, so let me show you that. Take a look at your chart. Now, before even this one, I was here in the morning with my community people. Let me show you the ICT London Kill Zone strategy. I know some of them took the trade, but then if you never close your position before here, because normally if you're taking it, you're supposed to close somewhere around here, it quickly reversed. But I'm sure so many of them took the trade and then they came out earlier around this area. All right, so let's do the TGIF strategy. The TGIF strategy, let's start by explaining what it is and how you can use it in trading. All right, so come in here, right here, I want to show you what it is and how you can take advantage of it. So here, ICT discovered that every week, if you have a candlestick, let's say you have a bullish candlestick like this, all right, you have a bullish candlestick like this, let's say weekly candle, price decides to print it like that. Over the week, it started and it actually moved all the way up to that area. All right, so let's say this is the candlestick. Let me correct everything so you can see it visibly. I just want to make sure you get this explanation. This is the wick of the candle. This is the body of the candle. This is the high of the candle. This is the close of the candle. So a weekly candle starts like this. Maybe it starts from pushing down, which is red, come in here and start pushing up, pushing up, pushing up, pushing up to this area. All right. So if we have price pushing to that level, what ICT said is this. This same candlestick uses the principle of power of three. What exactly is the power of three? It is simply accumulation, manipulation, and distribution. So if you break down this candlestick into a lower time frame, because this is the weekly, all right, this is a weekly candlestick. If you decide to break it into a lower time frame, maybe a 1 hour time frame or 4 hour time frame, this is exactly what you're going to see. You will see price starts on Monday like this. I hope this is explanatory enough. It starts on Monday, and normally the way it starts is accumulation over the week. All right, accumulation, and then Tuesday comes with manipulation, Wednesday, Thursday distribution, Friday closing. All right, so look at this. Price starts from here. This is your accumulation, manipulation, fake out, all right, fake breakout, manipulation, and distribution here. So did you realize that as price pushed to the highest level here, it never closed here as a Mabuzo candle? A Mabuzo candle is a candle that has a high pressure buy or a sell. It closes at the top of the high of that candle. Now most of the candlestick will decide to retrace at least to 15 or 20% of the entire candlestick. What that means is this. If this were to be the candlestick, if I measure from here to here, the retracement will be at least to 15 or 20%. So look at this percentage. Can you see? We have percentage, right? We have 50, we have 20, we have 2. So 2, 20, 50 down. So the retracement is going to retrace up to 20% of that entire candle at least. All right. So this is what I mean. Let me show you that. On Friday alone, I'm saying this on Friday. On Friday. So look at this. If I pick my fib level, put it from here to here. What I'm saying is that on Friday, I'm expecting price to retrace and close here, which is a normal size candlestick. You see the open of the candle here, the low, the high, and the closing of that particular candlestick. So this is it. I am expecting to see this. And what time of the day does that happen on Friday? You should expect the retracement in the New York session. In the New York session, it can start from 10 a.m. New York session, all right, or even higher time frame than that. So you expect that to happen, and you can see that coming in when you have a shift in market structure from a lower time frame at that time of the day on Friday. On Friday. Please mark my word, I said on Friday alone. All right. So that is what we did to take that particular trade. You saw us make some money in. All right. So I hope this is explanatory enough. So let me go back to the chart and then show you in practicality what we did. So this is our chart. I looked at the chart and say, okay, this is GBP USD and I want to take this trade, but the trade we want to take is the TGIF strategy by ICT. So look at this. What is the bias on GBP USD? Can you look at it and tell me the bias? It is bearish. And if we know it is bearish, we see price coming back. Try to clear this low, which is here, but then we fell. We started coming up, coming up, coming up. We did not shift structure here, but we went into this particular, look at this. Can you see? We went into this particular bearish order block yesterday, which was Thursday, right here. And then today we saw the candlestick printing. That was where the entire idea came. So I saw this candlestick printed as a bullish candle up to this area. And I said, okay, guys, so let's do TGIF. This is the daily. Don't forget, if you go to the weekly, you're going to see the same thing. All right. Almost the same thing. So price decided to do something really, really massive. Price was somewhere around here, somewhere around here. And I said, okay, guys, remember TGIF, we are expecting price to still retrace to 20% of the candle. You see, now we have retraced more than 20 because it is at least 20% of the candlestick. It was here. And we said, okay, let's find a shift in market structure in the 15-minute time frame and then take the trade on that regard. All right. So we decided to go to the 15-minute time frame on GBP. Remember, I said GBP USD. The 15-minute time frame was what we came to. And I said, okay, where do you think price is going to retrace to? Now, you will say this is a counter trend. And this is true because everybody counter trades in the market. If you are not counter trading against the higher time frames, such as the monthly or the weekly, you are either counter trading against the 4-hour. But the most important thing is that you know exactly what you're doing. I hope this is explanatory. All right. So look at this. We were here. We were here, guys. We were here. It was a live analysis we were doing. And I said, okay, if price were to come down, it will come to this bullish breaker block. All right. Price went boom, leaving this bullish breaker block. You see the marking I did since that time is still here. It was here. I said price was supposed to come here. How many pips were we expecting? When price was almost here, I said, okay, we're expecting almost like 20 pips or 19 pips. I said, okay, it's a decent price movement. We can take it. So I said, if we were to wait for the 15-minute time frame, it would take us a longer time to see the shift in structure. Why can't we use the 5-minute time frame, and that was exactly what I told them before taking the trade. So I came here, I said, if we took out this guy here, if we decide to take out this guy, it means we have a shift in market structure. Then somebody asked in the Zoom meeting that then I am breaking my rule of 3 candle price action. I said no. I have made mention of exception. You can do some exception with the retracement rule when you see a massive candlestick that has covered at least 3 candlesticks or 4 candlesticks. This one, you see the massive fall down and the displacement is evident that this guy, we can consider it as a retracement. So I consider this place as a low. All right. So if I was to take trade, I needed price to close below here. So price actually closed here. All right. Price actually closed here, below here, and it pushed. I say, okay, if I want to take the trade, I need price to come back here. So this was the marking I did. I said this was implied fair value gap. What is implied fair value gap? You don't have fair value gap, but you can measure 50% of this wick. Wick is basically this, tail. 50% of this tail, that's half of the tail, and 50% of this tail. And that becomes the point of entry. You see, it's detailed. It's detailed. So I saw that and I said, okay, the reason why I am insisting on that is because I saw price like this. Let me take out this 20%. I'm done with that. So I said, let me take out that one. So this is it. As you can see, everything I'm doing, price was here and somebody was talking about this particular fair value gap. I said, no, I'm not sure this was the fair value gap. I needed price to come here. All right, to come here to this particular implied fair value gap. I said this was where I want to take the trade. And then guys, trust me, I was patient, and boom, price came to that area. And that was when I said, okay, this is what we need. Let's get into the trade here. And our stop loss was here, right above here, guys. We were not that very stingy with the stop loss. It was a live trade, guys. I call it out. So I shared with them. It started moving. We were happy that price has started moving. And you see, price went all the way here. And we were not stopped out. Why? Because this is almost 3 pips spread, except if your broker is a thief. I think it was 3 pips spread when from the initial one. It was somewhere around here, I guess. Almost 3 pips spread. Except if your broker is a thief, you don't have a challenge with that. I almost gave up on the trade, but I said, okay, my way of trading is, if I said I walk away, I don't care. Anything that will happen, let it happen. So that was the reason why we took the trade, and actually our target was somewhere around here. 1:2 was what we did. All right. So price actually worked out the way we planned with the guys. All right. So everybody was happy after making some money, closing the Friday. So this is basically what the TGIF is, guys. I hope this is explanatory enough, and I know some of you enjoyed this video. Why not share my YouTube channel link with your friends, with your colleagues? Let them come and learn how to trade Forex. And then if you care to join our community, very soon it will be available for everybody. It's going to be you can join it through website. It's a mentorship coupled with a community guidance and everything. It's a lifetime stuff. And there are some people that have reached out to me that they are interested. I should add them up. They actually paid and I added them up, but you don't have to worry yourself. You can still wait for the official releasing of the website. We are still working on it. Very soon it will be up there, and you guys will enjoy more on that. And I hope you guys enjoy this particular analysis. Thank you guys. See you next week. All right. Thank you.